Alrighty guys, let's get into this. Busy action-packed video. Why the next 13 days is insane and what to do the next 13 days. Well, I hope you're ready. This next 13 trading days is going to be insane. Okay, first off, we have, everybody knows the Mag 7, right? NVIDIA, Microsoft, Amazon, Meta, Apple, Google, McDougal, Tesla, right? Big, huge companies that really drive the market, right? 6 of those 7 stocks are going to be reporting earnings in the next 13 trading days. In the next 13 trading days, 6 of the 7, okay? That's going to be Microsoft, Amazon, Meta, Apple, Google, McDougal, and Tesla all reporting earnings. So if we're looking at the weighting of the S&P 500, Apple and Microsoft combined are around 13% of the weighting. If you look at Amazon and Meta combined, that's about 6% of the weighting. And if you look at Google, Class A and Class C shares, along with Tesla, that's about 5% weighting. So basically you have around a quarter, around, roughly 25%-ish of the S&P 500 weighting is we're going to be reporting in this next 13 trading days. So that's going to move the market huge, right? Absolutely huge. And if you look at the NASDAQ weighting, the Q's weighting, it's even a little more substantial than that, okay? And so now everybody's looking, because we're in a fear market right now, clearly. The market's been, in extreme fear now on and off for basically 2 months. And so it's natural to look at this and be very, very looking from a fearful perspective of like, oh crap, man, Apple and Microsoft and Meta and Amazon are about to report earnings, and Google and Tesla. Oh my gosh, I'm so scared. This is going to be bad for the stock market. We're going to tank. Oh my gosh, I'm so scared, right? But in reality, they could be Spider-Man and Superman. They could save us in regards to this whole situation, as they've done countless times over the past 10 to 15 years. I mean, I've been in the market now 16 years, and I can tell you the amount of times that we were going through a shaky market, drama, pullback, correction, major correction, crash in the market, and then big tech came out with earnings, and the earnings were better than feared, and people got more bullish. I mean, the amount of times they came and they saved us, like Spider-Man and Superman, it's been a lot. And so this could be a situation where the market's all tied up in tariffs and Trump and Powell and all this stuff right now. But in reality, we got the gauntlet coming of big tech earnings. If these companies come out with pretty good numbers and guidance that is respectable, they could end up being our Superman and our Spider-Man and completely saving the market, as they've done countless times in the past 10, 15 years. So don't just look at it from a fear perspective. Now, additionally, this is one of the most attractive times we've seen outside of 2022 for these companies' valuations. If you look at Meta's forward P, it's well under 20 now at this point in time. For a company like Meta that's, a double-digit top-line, bottom-line grower, to be trading forward P under 20, actually very, very attractively priced. Meta's very undervalued right now. Google McDougal, forward P is 16, very undervalued given Google's growth rates, right? Amazon's a 25 forward P. When have you ever seen Amazon at a 25 forward P? Seriously, when? It doesn't happen. Like, Amazon's forward P is usually 50, 70, 100, 200. To be trading at a forward P of 25 with 3 major growth businesses, an e-commerce business that's just going to keep getting better, bigger, AWS that's just going to keep getting bigger, and the advertising business that's just going to keep getting bigger, at a forward P of 25, extremely attractively valued right now. Like, insanely attractively valued. And so I'm looking at those sorts of stocks and I'm like, all 3 of these stocks are a buy before earnings. A buy before earnings. Now, if they go down anymore, guess what's going to make them? Even a bigger buy. But all those stocks, there's no way you can make an argument on Meta, Google, or Amazon, 3 of the biggest stocks in the stock market, and say they're overvalued. You cannot make that argument right now. It's even hard to make an argument that they're fairly valued right now. Really the only argument you can make is that either they're undervalued or extremely undervalued. And it's like, which one is it? Is it extreme undervalued or is it just undervalued? No, when it comes to the other 3 big guys, well, Tesla always trades at insane valuation. So I thought I'd plug in AMD. AMD is another big tech that's going to be reporting earnings in the next 13 trading days here, right? So Apple, forward P of 24, around 24, 25. That's pretty fair for Apple, given the stability of their business model. Somebody's iPhone breaks, they go buy another iPhone. Obviously the recurring revenue streams that they have, the 30% Apple tax, we call it like a government tax, right? Microsoft's trading at a 25 forward P. Their business model just recurs, like recession, blah, blah, blah. Microsoft's going to put up their numbers regardless. And so 25 forward P, very fair for Microsoft. I can't call Apple and Microsoft undervalued, but I can definitely say they're fair value. They're not overvalued anymore at this point in time. If we go back a few months ago, when those stocks were hitting all-time highs, you could make an argument that they were starting to get a little overvalued. Here, now after this drop, they're fair value. That does not mean they can't go into a Meta or Google or Amazon territory where they actually become undervalued. So do keep that in mind. Now, AMD, 18 forward P with all the growth that AMD is going to have over the next few years. Come on, man. Come on. What a steal deal AMD is right here, right? Now, that leads us into sentiment. Here we are, folks. 8 straight disaster weeks for AI investor sentiment. This is the sentiment survey they've been doing all the way since the 1980s. And how investors are feeling the next 6 months. Are they bullish on the market the next 6 months? Are they neutral on the market the next 6 months? Or are they bearish, right? We've had 8 straight weeks, basically 2 months of disastrous sentiment. Complete dumpster fire. We've never seen it this bad ever. Ever. In terms of an 8-week span. I've gone through the entire sentiment survey, all the way through the 2022 crash, the 2020 crash in Rona, the 2008 crash, the tech bubble crash, go back to the 90s, go back to the 80s. You'll never see an 8-week period this bearish. This is unprecedented. And here we are at this moment where over this next 13 days, we could actually start to flip a little more bullish. Now, this is not going to magically change overnight where all of a sudden everybody's and their grandma is going to be bullish. It takes time. But there's already the early telltale signs that people are starting to get a little less bearish, right? If you look here, peak bearishness actually hit this week, April 2nd, right? We were at almost 62% bearish. Then we went down about 59%, then just under 57%. I wouldn't be surprised if this week coming up here is probably still in the 50 range, but probably a lower 50 number. And so we're already getting the early signs here of the sentiment starting to flip, but we're very early days here. Now, once we get under 50% bearish, you'll know like the flip is real then at that point in time, right? Because then we'll start heading to the 40s and then we'll start, kind of getting more into a normalish range, but it takes a while. It's not like all of a sudden everybody just goes from bearish to bullish overnight. Doesn't work that way. It's a process. It's a process that essentially has to work out. Now, if I show you back to 2022, the latest crash we had, right, where the NASDAQ fell about 37% peak to trough in that crash, right, from where it peaked in 2021 to where it troughed at in the fall of 2022, right? If you look, the sentiment was extremely bearish right around the time the market bottomed, essentially, right? And so we might have already hit a bottom in the market at this point in time, right, on the S&P and the NASDAQ. And, right now it's just kind of like playing games, right? It's going to kind of get close to retesting the bottoms and things like that, but at the end of the day, it just ends up going up. So that could very well end up being what happens here, because this is right around the time that we bottomed in the market. Now, additionally, if you look here, I wanted to show you this, because after the market even bottomed, right, the market bottoms right around here. Even after that, there were still a lot of people bearish. Like, look at a lot of these weeks were still 40% plus bearish well after the market had already bottomed. Look at this, end of December 2022, 47.6% were bearish on the stock market the next 6 months. Guess what? Stock market went up in a straight line the next 6 months, okay? Look at even here, March of 2023, we're way off of the bottom now at this point in time. Look at some of these numbers, 48% still bearish on the market the next 6 months, 48% bearish. Look at even out here in May, now we're like 9 months removed, 8-9 months removed from the bottom, right? And we're still hitting some months or some weeks that 40% plus were bearish on the market, 7 months later or so. Incredible. But it's not just those folks, it's Wall Street. What I'm showing you is a screenshot that I took back in December of 2023. And even after, this is over a year after we had already hit the bottom in 2022. Look at how bearish Wall Street still was at that particular time. And these are the biggest Wall Street firms out there. We're looking at Goldman Sachs, Wells Fargo, Barclays, Morgan Stanley, JP Morgan. This is Wall Street. This is the big dogs. This isn't some like random funds or something like that. No. These are the 2024 S&P 500 year-end price targets for the big dogs. This is what they were predicting. Goldman Sachs was at 4,700 at that particular time. Wells Fargo was at 4,625. Barclays and Morgan Stanley were at 4,500. And JP Morgan was at 4,200. 4,200. That's where they thought the market was going to end 2024. We ended the market in 2024 over 50 800. They were not just wrong, they were wrong by a mile and a half. And so this goes to show you that Wall Street stays way too bearish, way too long before they start to flip over to the other side. That's why actually I was a little scared going into this year, because Wall Street was actually so bearish going into this year, and it's kind of like, it's got to be a trick, man. Sure enough, market just dumps like crazy. As of right now, the Nasdaq's down around 22% from the highs. 22%. Thank you, Wall Street, for going bullish going into this year, right? Figures. And so here we are in the situation where you got to understand the sentiment turns slow, but as it starts to turn more and more bullish, the market, guess what happens? It goes higher and higher and higher. And so that's what you see many times here, right? Now, additionally, what I'm showing you in front of you right now is the latest margin debt numbers. So if you don't understand margin, just think of it as essentially taking out debt to invest more money, right? Instead of having $100,000 to invest because it's your own money, you have another extra $100,000. Now, people take out margin, meaning an average Joe sometimes. Horrible decision, by the way. It's going to come back to bite you. But individuals do that sometimes. But then additionally, big money does that, like hedge funds, like some big money folks, because they want to try to make more money. And they say, gosh, man, I made 15% last year. If only I had even more money to invest. Let me take out some margin, right? Oh, if I can make another 15% this year and I have to pay back the debt at 7%, that's 8 percentage points of arbitrage there. That could mean, hundreds of millions of extra dollars or billions of dollars of profits, right? If you're a fund. So when it comes to margin debt here, we're clearly in a downtrend, which is great news, actually. This is something everybody should want to see that's going on out there. Is margin debt going down? It peaked right here, January, $937 billion, then went down to $918 billion, $880 billion, right? I think we're going lower here. I think we're definitely going lower here, okay? I would say, because remember, this was as of the end of March. Remember, April was a pretty panicky week, okay? When you get a panic week in the VIX spiking, remember the VIX spiked to like 50 plus, right? When you get that sort of kind of panic in the market, people are liquidating margin rapidly. And so that's what we have seen. And obviously the market's still extremely jittery, still in a lot of extreme fear out there. So it's not like people are running out there and saying, oh, I got to go margin up right now. And so my opinion is when we see the next margin levels, that still won't come out for several weeks for now, but we're going to likely see a low 8 number here, maybe even a high 7. Because based upon all that panic selling that happened at the beginning of April there, I'm telling you, margin debt's going to be way down, in my opinion. Way down. Like we'll see the lowest levels we've seen in quite some time, to be honest, right? And if you want to understand kind of what levels we're going down to, we're going to go all the way back down to, in my opinion, with these next numbers that come out with margin debt, all the way back to levels that we were at the beginning of 2021. Now keep in mind, the market's way higher today than it was at the beginning of 2021, but it just goes to show you that we're likely going to go back to, lows, or we can call it margin debt levels that happened years ago. We're talking 4 or 5 years ago type levels. That's where we're headed in regards to the situation. And I'm even looking at some stocks that, obviously we spoke about big tech, but I was even looking at somebody like an American Express that came out with very good earnings and a good guidance number here very recently, as in last week, right? Forward P of 15 on this stock for American Express, such a quality company. This is one of the most quality stocks in the entire stock market, American Express. And so it just goes to show you that at this stage in the market, you're getting a lot of opportunities outside of even just the big techs. You're even getting some of these opportunities, right? Now, when you're getting some of these easier money opportunities, you got to understand, right, that the smaller cap stocks, those ones are going to be even more of an insane kind of risk reward arbitrage, right? The big techs, the Metas, the Googles, the Amazons, that's giving you a chance to add some of those companies to your portfolio at extremely joke prices, right? Like you're going to make a lot of money on those stocks. You hold them the next few years, right? But you got to understand that some of those small cap names, I did a full video, what was that, probably 3 or 4 days ago here on the channel. The best ROIs are going to be in some of those small cap names. That doesn't mean position into all those small cap names and go crazy with those, because those still have a lot of risk given the market conditions we're in right now, right? But just the best ROI opportunities will be those. And so that's why I love to build, we got our stake, which is kind of those big tech companies, the ones that I own, like a Meta and Amazon. And like I said, Google looks great right now, even though I don't own it, looks great, right? And then around that, you add some of those small cap names. Then you add some of those quality names, a dividend value type stocks like an American Express. Oh my gosh, you just have you're really at a buffet. You're at a buffet of opportunity in this market now at this point in time, right? That's the best way I'd put it. Now, keep in mind, what do you do during earnings madness like this? Which I think is a very important question. What do you do? It's like the grizzly bear's after you, okay? Play dead. You play dead, okay? You be calm, don't panic. The grizzly bear's after you, okay? And so what I like to do when we're in an earnings season like this is I like to really just focus on conference calls. You don't see me doing all these massive buys and sells during a market like we're going to be in over this next 13 trading days. I'm going to be there. I'm going to be busy as heck can be with paying attention to what these companies' numbers are, grading their income statements, listen to conference calls, listen to those conference calls again, right? And so I still buy every single week, and I'll be buying during the next 13 trading days. But you won't see me making like drastic, like, oh, I'm buying $100,000 worth of this stock and I'm moving out $100,000 worth of this stock. No. I do that when we're out of earnings season. So if you look at the moves I was making a couple weeks ago, look at the moves I was making at the beginning of April, the end of March, a lot of big dog moves in there, right? A lot of big buys, and I was covered on the channel. I just bought $70,000 worth of stocks today. I just bought $80,000 worth of stocks today. I just bought $30,000 worth because we weren't in earnings season then. So I saw an opportunity, go ahead and buy those, right? Now we're going into big dog earnings season. Now it's time, the next 13 trading days, let's see all these companies' numbers. Let's hear the guidance, let's hear the conference calls. Then we can assess our situations and say, okay, this is the best opportunity. This is the best opportunity. I need to invest here next. I need to invest here next, right? Now's a time where you watch earnings. And so I'll still be doing my Friday every week buys, but in terms of just flush, like huge, big amounts of money, not likely during earnings season. Very, very low probability, right? I like to load up on the stocks before earnings season, right? And so if there's a great opportunity, you want to buy it before earnings, right? If you see a great opportunity in the market, right? If you're a long-term investor, that is. A trader, that's going to be a totally different story. You're trying to get in and out of stocks and play it from, trying to make $1 in this stock here, $1. No. If you're a long-term investor and you see great opportunity, you buy that stock before earnings. So for instance, AMD, right? I'm more scared of AMD going to $100 plus after earnings, right? Than going to $70 after earnings. If it goes to $70 after earnings, perfectly fine. I'll be more than a happy camper to buy more shares, right? But I'm much more scared of not buying AMD before the earnings come out. Earnings are good, guidance is good, conference call is good. The stock ends up going to $100, $105, $110, and I'm sitting there like, great. Like, why was I not buying more shares? And then I'm in a situation where I'm hoping it goes back down. I'm like, oh, please go back down to $90. Please go back down to $80, right? Other people are scared of going down on stocks. I'm scared of missing the money on the upside, right? I'm playing the game on offense. My defense is always owning value stocks and dividend stocks in my portfolio as well, and never risking the farm on one stock, right? That's my defense. But overall, I'm playing an offensive game here. I'm here to make money. I'm not here to preserve capital. If I was here to preserve capital, the only thing I would do is I'd just keep my money in a savings account all the time, right? And be broke forever. Like, that's what I would be doing. You're not going to make any big money being in a savings account your whole life. I can tell you that much, unless you have some crazy income or something like that, right? You want to get to the big dog money, you got to play offense, right? With that touch of defense in there. But defense is not saying, I can't buy this stock, even though it's a great value, it's a great opportunity, I can't buy it because it might go down. That can always go down, right?
Hey, it's Jeremy. I hope you really enjoyed that clip here today. Would you like the ability to understand how to do your own research and not just rely on others to tell you which stock to buy? Would you like to have confidence in yourself when it comes to making your own investment decisions out there? If you're going to be able to do that, you got to have full understanding of everything you need to look for in stocks, how you can decipher whether a stock is a buy, not a buy, all those sorts of things. That's where my private group comes in to help. The description area down there will have a link to apply to join my private group. We've taken over 1,000 people over time and been able to teach those folks exactly what to look for in companies, how to research companies, how to understand financial statements, understand all the different metrics so you can make judgments on companies. And we've been able to have so many people, an incredible amount of people, hit 6 figures plus in their portfolios, 7 figures plus, even some hitting 8 figures plus in their portfolios over time. So if you're looking to take your game up to the next level and play this on a much higher level, apply for my private group. Once again, the link is in the description area.
No, if you think about Elon, right? Elon made his money 3 big ways, okay? His first big way of making money was actually from a company he started, which was kind of like an online bank. Back when that was like not even a big thing, he saw an opportunity there to basically kind of create an online bank, which then later merged with a digital wallet company that ended up becoming PayPal essentially. So he saw this like vision before other people saw it, had little to no competition, and was able to go in there and create a big business and got a windfall of money from that, right? The second way he made a ton of money is SpaceX, right? No competition once again. SpaceX had no competition when they were doing all that stuff, right? Like there wasn't like, it was this company, right? Blue Origin obviously has been something that's gotten more popular over the past 5-7 years, Jeff Bezos' company. But at the end of the day, like SpaceX really had no competition. So if you look at these ways of making money, no real competition there he had. He had no real competition when it came to SpaceX. And then Tesla, same exact thing. Like everybody didn't start even taking EVs serious until really the past few years, right? And so Tesla for the longest time had no serious competition. So Elon made his great fortune from all these things that he would see before other people saw it, and it, basically had no serious competition at all. Well, that's changed now, okay? If you look at like Twitter, for instance, he bought that. It was valued at $44 billion. The valuation's gotten supposedly all the way down to $12 billion. We don't know, how low it's gotten. They're talking about maybe it's back to its old valuation of $44 billion now, right? But the moral of the story is Elon Musk, it doesn't look like he's made any money from X at all over the past 3 years of owning that, right? It's tough to compete with the big dogs. He's got to compete head-to-head with Meta. He's got to compete head-to-head with the Chinese with their TikTok app in those sort of social medias. He's learning like, oh, it's tough when you got to compete with big dogs, right? Additionally, now we're going to go into this rideshare market that he talks so arrogantly, cocky about. He thinks, Tesla's won. You just hear it in his voice. He talks so cocky, right? And he's going to now have to go head to head with Google. With infinite amounts of money coming out of their head. They don't even know what to do with all the money, right? He's going to have to go head to head with Google. And Google doesn't lose. Ask Apple. Steve Jobs, he put Apple in a great position with the iOS store, right? And Apple's product. At the end of the day, Apple still ended up losing the war against Google. Google ended up with, by far and away, the bigger market share with Android than Apple. So Apple still has a very successful business, but a very small market share, across the world, right? He's got to go head to head with Google. This isn't like some market that there's no serious competition. No, there's serious competition. And Waymo's in the market today with vehicles today that will drive you around with no driver inside. Something that Tesla hopes to eventually do at some point this year. Waymo's been doing this. And they're expanding rapidly. Additionally, he's going to have to go head to head with Amazon as well. There's these Zoox products that are in the market. These drive all over the Las Vegas Strip. If you ever go on the Las Vegas Strip, you'll see plenty of these. It's the city I live in, right? He's going to have to go head-to-head with Amazon. Amazon's got money coming out of everywhere, okay? He's going to have to go head-to-head with Amazon. Like, this is serious competition. This isn't like when he was, trying to create PayPal back in the day and there was no competition. SpaceX had no competition. Tesla had no competition. No. Now you're going direct against Google and Amazon. Oh, and there's that one company. I forget about them. Uber. You think Dara and Uber is just going to go laying down and say, oh, you guys can take us all over. We got 70+% of the market share, but no, here, you guys just take it all. No. Of course, Uber is going to fight with every muscle in their body to make it sure they survive, right? And do whatever they have to do so they don't end up with a market share of 5%, in 10 years from now, right? This is serious competition they're going to have to go with, right? The days of Elon Musk sleeping on the factory floor are long gone, right? Now, this is a much bigger point I'm about to make here that you got to really understand on a high level, right? When you have a leader of an organization that is a part-time worker, your workforce, you're going to get part-time results from your workforce. In order to have a great whatever behind you, whether it's a team or whatever, they got to feel like the leader works his butt off and is out there every day focused on this thing they're going after, right? I don't think there's anybody that works at Tesla, and I know, a good amount of people that work at Tesla. I don't think there's anybody that works at Tesla that really feels like Elon Musk is at all focused on Tesla, which leads a workforce to not really rally behind their leader. What is your motivation to do amazing things or work super hard when your leader is just a side project for him, right? There's not a lot of motivation for you. It's very different than Tesla 5 or 10 years ago when everybody was going after this big goal, when the company had his back against the wall and had this small valuation. You had a leader that was like, I'm going to sleep on the factory floor if I got to. I'm going to do whatever it takes. I'm going to work 7 days a week here if I got to. Those days are long gone. And that creates a workforce that's not very incentivized. You want to go to war with them? Of course not. Imagine Phil Jackson, great, NBA coach, maybe the best ever, right? Imagine if he was just like, part-time coming in, you think Michael Jordan would have won all those championships and Kobe Bryant would have won all those championships if Phil Jackson was just a part-time coach? No. Think if Bill Belichick was just a part-time NFL coach and was just part-time in it, you think the Patriots and Tom Brady would have won all those Super Bowls? Come on, man. You got to wake up at some point in time. You got to understand how business works. You got to understand how a workforce is motivated or not motivated. And if you feel like your CEO's part-time in it, why are you going to give great effort? If you're an executive, why do you even want to work for Tesla? Your fearless leader is a part-time CEO, a part-timer, right? That's probably looking for yes men around him and a yes men board of directors. And then you get yes men results, right? That's what happens. And that's important you understand this. And you got to ask yourself, why did this happen? Well, if you're Elon Musk, your net worth's $355 billion, right? People will buy and hold your stock regardless of how trash your numbers are. You could post bad numbers after bad numbers after bad numbers after bad numbers after bad numbers. You could just say, we promise in this, we're going to do this, we're going to do that, even though, we know these things don't work out. If people are willing to just continue to buy your stock and hold your stock, no matter what you do, where's your motivation? It's like welfare for the rich, I would call it, okay? So there's if you're on welfare or some sort of government assistance, people always say, where's your incentive to work? Because the government's just giving you money, right? The government's just giving you money, why are you going to work? This is the same exact thing for somebody like an Elon Musk. It's just we're doing a welfare for the rich. Where it's where's his incentive? Tesla has an $800 billion valuation, even though their numbers are garbage, the core business is rotten, the growth businesses are about to tank, right? They're behind competition now in several different key areas, and they're about to try to go to battle with a part-time CEO against some of the biggest companies in the world. Good luck. And so that's why this has happened. That's why Elon Musk, at the end of the day, where's his incentive? If Tesla stock was a $50 billion market cap, I can tell you, Elon Musk's incentive would be very, very different. But when people will buy your stock and hold your stock, no matter what, you could just say, we're going to be creating a billion trillion robots and, we're going to win this. If people just believe it, they're just going to continue to hold. And at the end of the day, it's just welfare for the rich, right? Next up, what would it take for me to buy Tesla back in future years? I don't know, man. I don't want to say I would never own Tesla again, but I just have trouble seeing how they're gonna. Because let's be very clear, Tesla's a turnaround company now, and that sounds insane to say, but it's the truth. The core business is broken. The growth businesses are about to go to very small growth rates, maybe even negative. It's a turnaround company. And so with turnaround companies, you got to get them for dirt cheap valuations. Does Tesla have a dirt cheap valuation? Absolutely not. The forward Ps, the price to sales ratios, all that stuff is insanely high. So the valuation would need to come down so dramatically from here. I'm talking like a 70, 80% crash to make me say, you know what, this is worth me throwing some money in. Or I would need to see Elon go full-time back at Tesla again and put in crazy work, crazy effort, and get the whole workforce re-energized. It needs to be dramatic, though. It's not like there's a small, Tesla stock falls to 190, I'll buy it. No. I wouldn't buy Tesla today at 120. The stock could fall 50% from here, and I have 0% interest in buying Tesla. Things are that bad, factually, with the company. So, I'll never say never, but man, so much needs to happen for me to, even buy this one. So goodbye Tesla Tesla. It was fun. Made crazy money on that stock over the years, but yeah, it's sad it had to end this way. But at the end of the day, it's there's always going to be, someday I'll sell Meta stock, right? Out of it completely. Like every stock I buy, there will be a day that eventually I'll sell out of that stock completely, right? And Tesla stock I held many, many years and through a lot of dramatic times, but it's clear, things are in, it's not worth it anymore. So, alrighty guys, appreciate you joining me. Much love as always, and have a great day.